Hi, good evening, guys. Uh, just one moment. I'm sharing the link. Hi, good evening, guys. Uh, I'm getting my echo back. Let me set up channel. Hi, Jamie. Hi, Vasudha. Good evening. Good evening. Let me just share the link and then I'll talk. Yeah, good on here. Twitter. I need to post that link. Okay. So I am all set right now. Let's see, like it's about 5 minutes. So let's see how many people join. 10:30. But all in all, market is at a very critical stage. So this is the data, like Bureau of Labor Statistics. You should always refer if you want to understand what CPI is, or if you want to understand what the components of it, what are the expectations of CPI, understand the weightage and its importance. This is the page, US Bureau of Labor Statistics. This is an official set of information, so it should be really, really clean, and it should be really giving you details factually rather than any other website which you refer. This is the weightage page. And these are table 1 weight information. (2022) weightage. Importance announcement. Where is the weightage? Consumer spending patterns. Because it actually changed from 2019, 2020, because there was a COVID, and now the weightage has changed for 2022. And that's why I'm just trying to just check the latest one. It was updated in February of 2022. So I'm just waiting and checking out. Yep, it was updated on 25th February. So it also covers retail sales from the Credit Census Bureau using the private credit card transactions. It also covers estimates of consumer spending through that. And let me see if I can figure out, Google it. Again, we have few minutes, so I'm just using this time to open up CPI 2022 weightage components. If I can get image, it's much easier. Yeah, this is the Bureau of, but this was like 2021, 2022. I'm just trying to search that. Where is 2022? More or less, there's small change in the percentage. Come on. So this is actually the CPI. So let people join in so we can talk about CPI. Shelter, yes. Food, I would say a little bit cooled off as compared to it was in between. Hi Amit, hi Nagraj, hi Saurabh, hi Suraj, hi Mitchell, hi Mihir, hi Ganesh, hi Amit. Amit, I don't know whether I'm eligible to subscribe to Twitter Blue or not, because they have certain eligibility requirements, which like I need to have an official email address from a government agency or from something. I do have that because I work for government, but I'm not using that for Twitter. Twitter is my personal thing, and I do not have a company for my personal uh, thing. So, Shashikal, just good evening. So, hi and welcome to you all. Tomorrow is going to be a really, really important day in the market direction. It's going to be a make or break moment for the market, and market is poised really nicely back to its 37.35, 37.50 area from where it started. But going into that, I want to cover the CPI part, that when we are thinking about CPI, what all should we consider uh, in expectations of CPI? CPI is a component-based index where it has multiple, each element has its own weightage. So food is 14% uh, as a weightage in CPI. So if we see relative food prices in the last 1 month, and we can do that research right now, uh, food prices over last 1 month. Again, we cannot be 100%, but we cannot be like totally ignorant and go by somebody who puts anything anywhere. So it's better to just look at the charts of the food price and see if there is certain increase or decrease. So this is the food price index, and this is for the period of September to October. Now you see the food prices have eased off little. They are picking up, but at the end of October. So this, I think, will give somewhat uh, cool off to CPI. That's a 14% component here. Rent, let's check the rent price. Rental index US. Again, these are based on the US government data. I'm not making up anything on my own. So rents, this is like annual, not monthly. So I need to go monthly, month to month. So there's a change of 0.088 from last month. So again, this is one more index. It has only gone up. Now rent has gone up from 373 to 376. So rent has increased 1% over the last 1 month period. Now in this case, where is the meeting? Now in this case, you see right here, housing has increased, food and beverages have little bit eased off. Transportation index, let's check that. Transportation. No, it's not there. I need to search US transportation index monthly of month to month. Let's seasonally adjusted. So as of now, rents have moved a little higher. That's 1% higher. Food is almost on the same lines. Not done anything specific. transportation adjusted data. So it's not clearly available. So that's fine. Apparel and retail, that has definitely come down because the PCE was down. So apparel and that's there. Education, I cannot figure out how to check that. Medical, I cannot figure it out. So in 4 or 5 areas, either it has cooled off. In housing, which is the biggest component, it has raised by less than 1%. So relatively, I would say uh, it should cool off. And that's why when I was posting on Twitter that my expectations are tame towards CPI, because it has covered, or it has given an indication that yes, uh, inflation is not cooling off, but it's kind of like a little bit east of month on month. Now, if we go to the PC index, right, which was the personal consumption, and personal consumption index cooled off last time when this number came out, right? Personal consumption, uh, this came out in September, August, zero point 0.4. Now, if you see, apparel will come under personal consumption, recreation will come under personal consumption, goods and services will come under personal consumption, and that. So more or less 1, 2, 3, 4, 5 components, we are expecting it to cool off. Housing, yes, went up. So net, if I take consideration, I think CPI should be around 7.8 to 7.9. Now let's go to the calendar and see what are the expectations on the CPI for tomorrow. So tomorrow 8:30 CPI expectations are at 8%, which is this number. CPI year on year is about 8%. Month on month, it is expected to get a little crazy, go a little higher on 0.6%. 0.6% because of the housing. But overall, it has come down. So let's go into detail and see what is covered in these two. So CPI year on year. Again, now you have clearly seen once the US dollar is strong, the market gets weaker. So all these indexes will give you an indication whether the US dollar is getting stronger or weaker. So the CPI index measures a change in the price of goods and services from a perspective of the consumer. It is the key way to measure the changes in the purchasing trends and inflation. So this is a very clear indicator of how the inflation is measured. Now, a higher expectation will be positive for the US dollar, meaning higher CPI, US dollar will get strong. US dollar will get strong, then the market will be weak. Now, this is the expectation. 8.0, previous was 8.2. Last time it came from 8.1 expectation. It uh, came higher than that, and we had a good drop on 13 October. And let's see the chart for 13 October on ES. Let me remove the volume. So 13th October, we had, this is the date, 10/13, we had the intraday low of 3,502, and then we bounced right from there. So there was a massive down move on that day, initially from 3,502, like it opened at around 3,600, went down 3%, came up and closed at 3,680. So this was a very volatile session. And in that volatility, what happened? We digested that yes, we have made a high, and we assume that yes, inflation has peaked. Now, to confirm that theory, inflation has peaked, the forecast has reduced to 8.0. And now, if we come down to 8.0 or 7.9, like something in line, market will like it and can move 1%, 2%. If it comes around 7.8 or less, that will be a big thumbs up by the market. So I'm not expecting anything above 8 or 8.1, not even 8.1. I'm expecting 8 or less than 8. So I'm expecting a positive move from the CPI. Now, in case if it comes above 8, that will not be liked by the market, because last time market assumed that yes, inflation will be easing off from there on, and that's why we made the bottom of 3,500 and went up all the way to 39.25. Now, if we are not able to stick to that path, then it is going to be a little difficult for market to sustain these levels and go down. As of now, tech is really weak. Last time when we were speaking about CPI in month of October, I clearly said that if market has to go down, this is the prime area, prime moment for market to go down. Market went down, but it dramatically uh, went up on the same day and closed almost 180 points up. Tomorrow could be the same volatile day as well. So do not jump into futures at 8:30. You will have a clear one-sided trend, or maybe for multiple days after the market open. Wait for the right opportunity. You will get it. But before jumping into that opportunity, make sure you read what the CPI is indicating. Understand the impact of it. Okay. And that's what I wanted to cover about CPI. Now we'll talk about the levels on ES with respect to the CPI, how CPI is going to, if CPI comes about 8 or less, where we can go from here on the higher side. If CPI comes at 8 or above, where we can go down from here. Any questions on CPI related items or elements? If you have, you can post it over there in the YouTube, and I'm more than happy to answer it. I'll wait because there's a lag. So I'll wait in between. Let me search the PCE index of index last month. Latest release was this one. So this was the PCE index where you see the single food and energy prices, and number was yes. So here on August 28, the food and energy prices came out less than expected. Okay. So this is something which I'm taking as a base when I'm considering into CPI. Rents have gone up a little, as I said, about 1%, 0.8%, but food, energy, and recreation and other things have eased off a little bit. So net, it should be 8 or less than 8. Anybody has any questions around this? Let me know. I can also share the Zoom link, but these days nobody likes to join Zoom. So I don't know. Let me just post the Zoom right here. If you want to join, you can join Zoom and we can talk here. If you have questions, you are more than happy to discuss. I'm more than happy to reply. All right, if nobody is coming, let's talk about the levels. Now this level 3800, this was a base of inverted head and shoulders. Okay, this we were trying to hold 3800, and today we lost that. Yesterday we tested this long-term trend line. Let me just make it a little bigger. Yesterday we tested this long-term trend line right there. Let me change it to green right here. This was 3800 line. We tested yesterday. It bounced off right from the long-term trend line. Today it did made an evening star. It covered almost the entire body of the candle. So this is candle 1, 2, and this is the third candle. So on the third candle, it has and almost covered the body here. Now, in this case, we had an area 3735, which is right there, 3735, where we have seen multiple times the bounce. So this is an area where I would call as a make or break. If tomorrow CPI comes, for example, at 8 or higher, okay, then 3735 is an area which should be marked as a wall. If we lose this area, we do not have anything until 3630, because you see we have this void here. There are no EMAs, there's no support, so we have a void here. Then 3635, 3630, 3635, and we are going towards this area of 3500, which will be a double bottom area, 3500. Now we need to visit and see whether we can go here if the CPI is higher. Yes, Shige.
Hey, Naval. Hey,
Yeah.
so question about the correlation between the indexes. I see the Dow has been stronger nowadays compared to ES and Tech. Tech is the weakest one, right? So how do you see going forward? Because looks like the Dow has hit the upper trend line. So it looks like is failing there over there, and looks like it's gonna weaken. So how do you see the moves after the CPI, like in Dow?
I'll check Dow right now. I'm just on ES, so I'll go to
Yeah.
Dow and check.
Okay. Thanks, man.
So on ES, you see right here, 3735, as I said, is an important area. If we lose this, and this will only happen if CPI is higher than 8%. If we lose this, then we have no support until 3660. So here it falls, we go down 3660. If we find support, we may bounce, but it's a weak support now. If we lose it, we are all the way to 3500. There's no stopping in between. A small stop loss or small support 3635, that is because of the purple trend line which is coming towards the now. So this channel is really, really important. 3735 is make or break moment for you. On the contrary, if CPI is lighter, let's say 7.9 or 7.8, that will be liked by the market. If we cross this area, and again, we're coming to 3787, that's the 12 EMA. If we cross, let's round it 3785. If we cross this, we have 3800, and then we have no resistance until 3950. There's one resistance which is right here, this area. That's about 3860, which has been a pain point for last few days. That may be the one area, but if the momentum is strong and we come back and we reclaim this long-term trend line, then 3860 will not act as a resistance. It has been tested multiple times. So it can easily be broken this time if we go above. 39.15 is the next in line. 39.15 has been tested well enough last time as well. So 39.15, if we test it, can easily be broken. So opportunity on the higher side is much stronger if the CPI is lighter. Fed has very made it very clear that yes, they are going to increase the rates, but if 7.8 comes, Fed will have to think about 50 basis points instead of 70 basis points, which they are expected to do in December. And this will be a really good thing, which will be liked by the market. Last time when Powell was there, he clearly said, I want to go and increase the rates. So we are increasing the rates. This is not a pivot. Pivot is something that they will stop doing the interest rate hikes and then they will think about reducing them. But that's not happening. That's not going to happen until March. Until March, they will increase. But the size of the increase, I believe, will be certain if we are 7.8, 7.9. If we are above 8, we'll still have 75 basis point hike. That's why it is very, very important. 38, this line, 37.85 on the higher side is your green light. 37.35 on your downside is your red light. If you go below it and then you just lose it, it's time to go short. If market regains 37.85 and go higher, you can go long. This is all about ES. Now, JK was asking about Dow Jones. So let me see if I have DI. I used to have DII, yes. So I have not done DII in long time. So JK, this is Dow Jones ETF. The Dow Jones ETF is right stuck at this area. This is W in making. There were big gaps right here, which were all filled when the market is going up. Because this time when it came back from 286, again on October 13, this has tested the positive momentum. It is making an evening star, but if it comes around 322 and gets its momentum back, it can easily cross 332. Like if you multiply it by 100, that's Dow Jones. So 32,000 something is a good area for Dow Jones to find support. It is making an evening star for sure, but the support is right there. Till the moment 32.56 is there on Dow Jones. Like you can multiply it by 100. 32.56 is there. It's all right on Dow Jones. Because we are still in the positive trend. There's nothing negative as such. Yes, it's making an evening star, but last time it also made the evening star, took the support of the 12 EMA and bounced. Same thing is right here. If 12 EMA is held, then it's good. Otherwise, if it breaks 12 EMA, it can test 315. That's 1,000 points down. There is no at such gap in Dow Jones from 286 here. So I believe it has still strength to carry on. And if you make Elliott waves, it's doing really good in terms of Elliott waves. Does that help, JK?
Yes, thank you very much for clarifying it. And so another question I had was, I know you talked about is very strong right now, and if it holds 12 the EMA on, and if CPI comes lighter, it's gonna rock anyway, everything. But it's been rocking for a long time. So what I'm asking is that, is there a ES and NQ gonna catch up to Dow? It may stay flat or up, and maybe ES and NQ gonna catch up with it later on, because
See, it all depends tomorrow. If tomorrow's market is positive on the CPI,
yeah,
then
everything will drop.
DI may take a breather. Like
Okay,
it may take some space here,
okay,
320 to 50, and it will allow tech and ES is still holding well. So
yes,
it will allow Nasdaq to come up. So if I go to Nasdaq's chart, Let's
Yeah.
talk about Nasdaq as well. NQ. So you see, Nasdaq is trying to regain that 11,000 area.
Yep.
This is tested multiple times, this long-term trend line. It has broken the inverted head and shoulders, and now it's testing this area. Right now, it's in near touch with the 12 EMA and went down from 11,000, almost 200 points. But if we get 11,000 back, then the next resistance is 300 points away, and then 350 points away. So 11,000 is an area on NASDAQ. If we can recapture, again, that's 1% away, 1.5% away. But if that happens, it's going to give me an opening which I can run for next 6%. So this
Yes.
opportunity
Yep.
higher on NASDAQ about 6%. In S&P, it's about 3.5%. Dow Jones, it's about 1%.
Okay. Okay. Awesome. Thanks. Thanks, Naval.
Okay. So Bobcat, you use open high scanner, yes, at 945. Open high were same, so you can go short, and you need to keep the stop loss of high. If it is gone at 10, then it means the market is too much volatile. So in that case, no, we do not need to run scanner every 15 minutes. It's only for the initial 15 minutes, and then we need to put a stop loss on the open price if we are going long or we are going short, and we need to take that direction. The idea is if the uh, prices are in the direction, then we should not hit the open price again during the day. If it happens, then the market is too volatile and it will hit our stop loss. Yes, go ahead, Zoom user.
Yeah, hi Naval, this is Naveen. A quick question regarding what Jeremy Powell said, right, regarding the rates. He clearly stated, and that that's when the market actually went down quite a bit. He clearly stated during the press conference that it's very premature to even think about that we are going to pause or reduce the rates. So I think
That
he's
is
very,
correct.
very, yeah.
That is
So
correct.
I don't know if you want to even think about like they're gonna pause or think
I'm not
reduce
saying that.
rates.
I'm not saying that they're going
Yeah,
to pause anything. I'm expecting them to raise the rate until March of next year. What I'm saying is instead of 75 basis points, they may go ahead with 50 basis points. And that will be a positive sentiment for the market.
I think even that he said like we are not gonna reduce.
Again, you need to understand this is not a reduction.
Yeah,
You need to be very clear in your understanding. Reduction means that right now the interest rate is at around 4 something. They will cut down on that. In this case, they're adding instead of 75 basis points, they're adding 50 basis points. That's it. It's not a reduction. It's an increase, but lesser increase. Next few months, we can have a quarter percentage increase or 25 basis point increase. But that will be an increase itself. I'm not
yeah.
expecting.
If I Yeah, I think during the press conference, in one of the reporters specifically asked that because saying that the markets are reacting, maybe in the next quarter in December it's going to be a reduction. I mean, instead of 75, it's going to be lower. I mean, they did not specify exactly, but instead of going with increasing the BPS, it's going to be slightly lower than what was anticipated. And they
No,
said no, that
question
it's
was totally different. Question was something that, yes, are we thinking about pivoting? Because market is reacting that, yes, you're showing a case that, yes, you're comfortable or you have some sense of cooling off on your interest hike regime. So he said, no, we are still going ahead and going to increase the interest rates. Market was expecting that, yes, in January or in December, they will finish the hikes and then they will wait for a period of 1 year before thinking about reduction. So he said, no, we will rate hike as much as March, and we will bring down the terminal rate to 5.1, 5 point something. And that's where the market reacted. Now that is priced into the market. Everybody knows that yes, it's going to be 5%. So what can be different here? The different is if CPI is lesser, we might have a wiggle room that instead of having 75 basis points again in December, he might do a 50 basis points. All right. So again,
Okay. Yeah,
you
got it.
need to just read his statement because that transcript will be available. It will give you clarity on exactly what he said.
Okay. So are you a little bit biased thinking that, it's going to be, so as long as the CPI is less than 8, it's going to be 50 basis points?
Yes.
Or, okay.
And like, I don't know if you're subscribed to my Twitter or not, but I posted during the day itself that yes, I'm expecting CPI to be tame, to be cooled off a little bit.
Yeah, I think even like last month, it was slightly lower compared to the previous month.
No,
Not by significant amount. I
it
think
was
it went
higher.
from 8.3.
It was higher than anticipated.
Yeah, higher than anticipated. But compared to like previous month, it was, so it
Yes,
went down from 8.3 to 8.1, I think.
yes, but the
But the expectation was, the expectation was even lower, I think, maybe
see
by
it's
point one or something. Yeah,
yes, it's not only about that. The idea was that it's starting to come down. It's starting to cool off. If it regains
right,
itself one more time, that means inflation has not peaked. If the curve is going down, maybe point 0.1, 0.11 month on month, if it goes down in that direction, it means that inflation has peaked. But if it spikes back, that clearly means inflation has some more room. So that's why market reacted the way it reacted and went down and make new lows. Again,
yeah,
we are waiting for the market to react. Once the market reacts, we'll jump onto the positions which seems comfortable to us.
right, yeah. Yeah, I think 37.25, in between 37.25 and 35 is a good support. If you lose that, like you said, I think you're going to hit that 3,500, 3,600 mark easily.
Yes. So we have a clarity that this is the range. Now, how the market reacts to the CPI numbers, it could be very volatile in the initial few minutes, and
Yeah,
then when the market opens, we'll have clarity. So trade with the levels in mind that if the market is below these levels, let's go short. If the market is below, like market is above these levels, then we need to go long. Just make a very clear choice in your trades. It will be easier to trade.
yeah. And the election outcome, do you think that will have some play as well?
Again, I'm sick and tired of answering this 1,000 times.
Right.
There is no
Yeah,
midterm thing. Please get this
right.
thing out of your head.
I know a lot of people are speculating. I don't believe in that either. Usually it's a seasonality, which is like last 2 weeks of
It's
October. Um,
it's been I've been saying this for last 1 month.
yeah,
There's
I
no
agree.
midterm thing. Midterm thing. How can midterm thing change the course of the policies? It
True,
cannot.
because that's an independent agency. Yeah,
It cannot.
yeah,
So
that's true. But I think there is some kind of optimism thinking that, oh, if
it's
Republican
no, no, no,
has a
no,
full sweep,
no, 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 no. Even if Republicans had the full sweep, then what? Can they change? Can Trump come in? No, he can only come in 2024. Can anybody from the Congress push FOMC to change their course? No.
no,
It's just that
yeah,
people who know nothing and they are just new experts in the last 2, 3 years, they think, oh,
right,
yes, this will have an impact because they read somewhere in an article. They saw somebody speaking on the TV. No, like when I started talking about Fed in last year, October, November, December, people were not like, I told them very clearly about the Fed. I told them very clearly about the cryptos. No, crypto is going to go to 100,000. Bitcoin is going to make
yeah,
this and that. I told everybody, no, it's a fake asset class, which is just there
exactly.
because of the Fed
It's
money.
not.
And
Yeah,
people did not accept that my language. They thought I'm saying rubbish. Now, like I'm just being honest. I spoke to a couple of my friends in April and I told them, sell everything you have.
Yeah.
And they said, no,
Even, what's weird is even a few of my friends in India, they are calling me asking, "Hey, well, I'll send you money. Can you buy crypto?" And I'm like, "Are you crazy?" I mean, and they're like, "Oh, this is a good buy point. Let's buy it now." No,
no crypto, see, any crypto, does crypto has any revenue? No.
no,
Does
it's
crypto generate
completely
any kind of,
speculative.
no, does
Yeah,
crypto generate any kind of profit margins? No.
no,
It was there because there was so much money coming from the Fed and it requires some area to dispose of. That's where it
right.
went in. And now, since the Fed is reducing the liquidity, all these asset classes are being hurt. Like why we had stocks like Roku at 550, now at 49. That's a 90% destruction of the price.
Yeah,
Same thing for Shopify. Same thing now for Tesla. It's what it went to 1200. Now it's like five. Uh, if you reduce it, it's about 560, 570. And I very clearly told in October, Tesla was trading at around 300. That 189 is the gap which needs to fill. My long-term target is about 89. It has come down almost half to it. Amazon, we talked about 80, 85. It's right there at 86. So you need to accept that this market is run by money which is Fed's money. There's no new investment which is coming into the market. And it has, even if there is a new investment which is coming into the market, it has to at least offset the Fed uh, taking the money out of the system. Only then market can go higher. And all these money, where it did not went to Caterpillar, it did not went to Boeing, it went to Apple, Microsoft, and these are the stocks which are getting hit pretty badly. It's a simple economics. People do not appreciate simple economics. They think, oh, my friend bought this, he made 200,000 last year. The same friend would have lost 400,000 this year, but he will not tell you. His 401k will be destroyed, but he will not tell you. So
yeah,
that's the thing. People will claim their gains, but nobody comes and claims their losses.
yeah. You're absolutely right. Yeah,
So we need to be very practical. We need to understand it's all pure supply and demand, and that defines the price. If there is no demand, then the extra supply will always bring down the prices. So that's
uh,
why I'm saying in December, it is priced in. We are having 75 basis point hike. If tomorrow's numbers come out a little cooler, we should have a better idea about next month's hike, which could be 50 basis points. And the same thing will happen to real estate. Just wait. I've been like very vocal about these things in last 1 year. People who bought houses in 2021, early 2022, they are going to regret their life why they paid such a high principal. They'll say, oh, we logged in at 3%, we logged in at 325. It does not matter. You already paid 250,000 over and above your prices on an average home. Like if it was 600,000, you paid it around 850,000 for it. And
yeah,
in next year or so, those prices will come around 550, 525 very easily. And if you're paying 8% on that for next 2 years, it doesn't matter because your principal is reduced significantly and that you can refinance in next 2 years when the interest rates will be back down to 4%. But can you reduce your principal? Never. And with all these job losses, when I used to say all this, people didn't like me. People think I'm speaking bullshit. Now that's happening. It's just that you have to look the facts in front of you and trade. And that's why I'm just saying CPI is based on that. 50 basis point, we go up. 75 basis point, we go down. Simple. All
yeah.
right.
All right. Thanks, now.
So guys, coming back to the NASDAQ. Now, as I said, NASDAQ has a very important area of 11,068. This area has been a very big support and resistance for the Nasdaq stocks. Right now, we are about 150 points away from the next support trend line, which is this long-term trend line. And similarly, we are 150 points or 200 points away from the 12 EMA. Tomorrow, supposedly, if I have a lower CPI and I am at 11,000, I will be more than happy to go long here. If it opens at 11,050 or 60 or 70, I am more than happy to go long here because I know my next resistance is at 11,300. So I still have 300 points for me to cover. So it doesn't mean that if it gaps up, it is not going to gap up. In this case, the gap up will be above 11,200. We will not gap up. And that's the important thing you all need to understand. Today's high on NQ and tomorrow's opening. If tomorrow opening is higher than today's high, only then it's going to gap up. Otherwise, it will be in the candle itself. That's why I'm assuming 11,000 will be an important area. If it breaks below today's low, then it will be a gap down. If it is gap down, we have 11,700. If we break 11,700, we are all the way going to 11,000, 10,500. So 10,500 on the downside if we break today's low. If we go above 11,000, we have 11,300, 11,650. And there's no resistance whatsoever. Last few times we have come here, tested it, could not close. So if it comes here, we have knocked this wall multiple times, this will break and we'll go higher. Yes. Yes, Mitchell.
Yes. Hi, Neville. I just had a couple of questions. So, with the expectations, I know you were just talking about jobs and tech, like doing a lot of hiring freezes and everything, because
Yeah.
they think what may happen next year. When do you think that's going to correlate? I know it's correlating now, but when do you think that will seriously correlate into the housing market?
Early next year, like maybe first month of next year. First month to, because housing market is a laggard. It's the last one to get impacted. Now the jobs have started to gone and they started to come in the headlines, like Twitter fired 3,500 people. Then banks have fired people. Today, Facebook has fired 11,000 people. So it becomes a headline news. Probably in next 1 month or so, after the festivals are gone, Amazon will fire a lot of people because they're not expecting a higher revenue and they have hired enormous number of staff. So they will fire. And once that news is out, it's going to create some panic in the market. And that's where the house prices will start to go down. And you can start looking at the prices. Now, there is no multiple demands. The mortgage applications have come down to the lows of 2005, 2006. Nobody's actually filing for a mortgage right now. Now, if you go for a house, there are no multiple bids for a house. There's only one bid. You go and buy it. So in the next, like next year, totally will be an awesome period to buy a house. Yes, you'll be paying a higher interest. Yes, for 2 years, but your principal will be, you're paying higher interest on a very low principal, which will be very, very useful. And these prices will not come back pretty soon. Because remember, there's no Fed money, which is coming back. Fed will not allow to print more dollars and destroy, because inflation is going to be here in next couple of years. So they're not going to add new dollars into the market anyway. Unless and until new dollars are coming into the market, these house prices will not go up. They will only go down. Simple logic, simple economics. Price is defined by supply and demand. Previously, There was less inventory in houses, enough demand. Price were going up. Now the demand is not there. Supply is increasing. There were new houses which started to get construction in last year. Now they're adding into inventory. Yes, they still America has less number of houses than they need, but do we have enough demand? The answer is no. We do not have it demand at all. It is 5% of what we had last year. So the prices will go down.
So
And
Neville, I have a question. If the prices do go down, will that still affect buyers as well? Because, like you said, some buyers may be paying a higher interest rate, so that means their borrowing power is less. So would that even affect the prices even more?
yes, see, supposedly the house last year was 750. Okay, let me clean this. It was 750 last year, and you logged in at 3.5% rate, and there was enough demand for it. Now, same house next to you, you listed at 650, because here you had the valuations plus the bidding wars, where people were outbidding each other, and it went to crazy 100,000. I've seen very in front of my own eyes. Now that price is 650. Interest rate was 5, or let's say 6%. Here we have, let's say, 10 buyers. Here we will have 5 buyers. Now with 8%, you will only have 1 buyer. So if demand is cut down 1/10, prices will start to hit. And with people losing the jobs, there will be foreclosures that will also add into the inventory. There will be panic sellings that will bring the market down. So there were no houses. Now you have 3 houses of 650. So a buyer will have 3 choices. So he can bring the price down to 600K. Maybe if he gives more and more accommodative, he can bring it down to 575. Now 575 at 8% versus 750 at 3.5%. This 750 will never come down. This is already 175,000 less. If you pay 4% for next 2 years, you will end up around 40,000 roughly extra, which is still 135K savings overall. Because in 2 years, this will come down to 4% for sure, or maybe 5%. But your principal is saved. People who bought 750, this will take few years to go back to 750. So if they have to sell,
that was my question. I was going to ask you, like, with the way, I didn't mean to cut you off. I was just going to ask you with the way that how high we went up, when we go back down, and when we start to go back up, will we go back up at the same speed?
No. We're not going to go up at the same speed.
Okay.
We'll go up naturally, which is genuine, like 2%, 3% increment, 5% increment every year, not like 20, 30% increment in a year. And if we go into deflation, where the demand is totally cut down, you might even see prices going down further. It's a cycle. If we hit on one end of the cycle, all the other areas will get impacted. Like
I've noticed that with cars now.
What? I didn't get you.
I noticed that with vehicles now too. How they're going through their little transition as well.
Yes, the prices of the sold cars are used cars are now going down. And few months back, they were all over the place. Like if you're going to buy a Honda Accord 2015, 2016, you're paying about 15,000 for it. Now it's like back to 10, 12,000. But will that price go up? No. So it's again like everything is in front of us. It's up to us whether we want to accept it or we want to go by the peer pressure. Because most of the decisions we take, we do it by the peer pressure. My friend bought it, my relative bought it, so let me buy it. Same goes for the stocks. Most of the retailers buy the stocks when the market is going up. They do not buy the stocks when the market is going down. This market is going down. There's a good opportunity to add SPY for next 3 years. Like if I open, 1 second, let me clear this.
Thanks, Neville. I'm going back on mute.
No problems. Like if we want to go to SPY and we go to January of 2025, okay. Now let's go to 500. So do you think in January of 2025, which is almost 2.5, 2.25 years away, we can see 500 on SPY? Or if you want to go to maybe higher than that, about 600, do you think we can go 6,000 on SPY? Definitely we can go. Or you can do a 500 and a 600 spread, put 10, 20 grand over there and just leave it. And you will not regret. Because over a period of next 2.5 years, market is going to go up definitely. So, and it's not very big moves. In 2.5 years, if we take 10% average, we should see 480, 450, which is back to the highs. So in that case, that 500 call, which is now $12, will become $20, $30. So it's a time like when you need to invest in the time of fear. And we need to sell when everybody is buying. That's the thing which I learned in 2008. Sell when everybody is buying and buy when everybody is selling. All right, it's almost 45 minutes. Now, anyone has any other thing? Otherwise, I am more than fine to close it. Yes, Tahir.
Hey, Naval, I've been out of the markets a couple of days, just been traveling. For tomorrow, would you, I mean, obviously we are 1 hour before markets when this was going to come in CPI. So would you play the futures or would you just wait till the market opens and then?
No, I will not play the futures.
So you'll play stock specific once it opens?
Yes. Because there's a 50-50 chance if I'm wrong, if I'm right. But if I'm wrong, I'm going to hit stop loss or I'm going to hit 50-point move on the downside. First, it will create negativity in my mind. Oh, I started the day with a negative trade. Second thing, I'll be trying to find a positive trade to cover that loss. I will lose my focus in the market. And that's what I don't want. Wait
Okay,
for.
so basically you'll watch for the first hour
Yes,
when
watch
market
it.
opens. Then, yeah.
Even today, like I did not trade anything. And in the afternoon when we had opportunity, we did trade that.
Got it. Cool, man.
The market
Thank
was for 7.5 hours. It doesn't mean that we have to trade it every single minute.
True. Take care, man. Good night.
All right. Yes, Paresh, you can always, don't feel it's going to be late. You need to understand. That's why I'm saying that you need to understand why the market is up or why the market is down. If you understand the rationale, if you understand the logic, if you understand the price action, you will be able to enter. It doesn't matter if it's a gap up or it's a gap down. You need to understand the rationale behind it, understand the price action behind it. All right, guys, thank you very much for joining in. I hope you all the very best for tomorrow. In case you have any questions regarding CPI, put that on Twitter. I'll be more than happy to answer that. And in case you like my sessions, please subscribe my videos and do a like and share it. The more you share, the more people can actually watch it and take some benefit out of it. Thank you very much. Good night. Bye-bye.